Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me are my co-host, CoinDesk managing editor of Global Capital Markets, Lawrence Luton, and we've got executive director of global content, Emily Parker. Good morning, Emily. Lawrence.
Hey, good morning.
Big news today. Let's have a look at Bitcoin first. The CoinDesk Bitcoin price XBX index currently at $19,770. Bitcoin is slightly up, about just over 3% over the past 24 hours. CoinDesk Ether price ETX index right now at 1086, also rising about 4.8%. The DFX CoinDesk DeFi index, meanwhile, we're seeing that at 130, rising, soaring 11% for the day. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as leader in crypto news, events, and data. It's really interesting considering we just have producer price index numbers coming out 1.1% in June, goods rising 2.4%, services 0.4%, and final demand prices for the past 12 months at 11.3%, Lawrence.
I was just going to say that 1.1% is month over month, but the 11.3 is year over year. And this is considered a leading indicator. This is this is what the producers are basically paying. And what we can expect down the road is even more inflation. We had this 9.1% CPI yesterday, the inflation rate there. And it just shows that the Fed doesn't quite have a handle on inflation. This is kind of what we were discussing yesterday. Now we're seeing in the Fed fund futures market, the expectation is that the next rate hike will be 100 basis points, one percentage point. And that means that the market is expecting the Fed to get aggressive on interest rates. What that means for crypto is potentially, we talk about a stronger dollar, or at least a relatively stronger dollar compared to like the euro, right? Euro and the US dollar are now at parity. And if that's the case, that actually weakens crypto because a stronger dollar relative to all things being equal.
We're seeing a bit of a bounce today while traditional equities are down.
Yeah. But again, these kind of bounces, we're still at under 20, right? We're under 20,000. Mm-hmm. And longer term, it's not, the catalyst for a crypto rally, at least for the time being, it's just not there. And it kind of goes against the whole narrative of Bitcoin is this inflation hedge. We're
certainly seeing right now crypto companies are getting shaken out. Celsius most recently just filed for Chapter 11 bankruptcy, saying its purpose for the voluntary action is to enable a comprehensive restructuring plan that benefits all stakeholders. We have a statement from Alex Mashinsky, CEO of Celsius, saying this is the right decision for our community and company. We have a strong and experienced team in place to lead Celsius through this process. I'm confident that when we look back at the history of Celsius, we will see this as a defining moment where acting with resolve and confidence served the community and strengthened the future of the company. Emily, your thoughts on that statement?
Well, of course, he's trying to spin this in a positive way, but I think it is worth looking at this statement carefully in terms of what it implies. It implies that Celsius will continue to exist and that Celsius is going to come back from this stronger. Now, whether or not this happens is, of course, we don't know, but I think it just raises some questions about what this bankruptcy filing really means. I think a lot of people are, quote unquote, dancing on his grave and saying, okay, Celsius is dead. That's not necessarily the case. In fact, one could argue that bankruptcy is in some ways a way out. It's a way to get out of their obligations to creditors. And that's at least how he's spinning it. And I think that's a question that should be asked are they in some ways getting almost a safety net here?
Well, we have a perfect person
I'd like to put my money. I'd like to put my money in with Lehman Brothers. Sure. At this point, what's Bear Stearns doing? I mean, anyway, sorry.
Well, we have the perfect person to weigh in. We've got Preston, Dahl. He's a partner at restructuring group Dahl, Ropes and Gray LLP. Hi, Ryan. Thanks for joining us. So you've heard this statement from Celsius. Emily thinks that, there's a chance that they may still exist after this Chapter 11 bankruptcy proceeding. What are your thoughts off the bat?
Yeah, first of all, thanks for having me this morning. candidly, I think it's too early to tell. I mean, the notion of a crypto bankruptcy is truly uncharted territory in terms of restructuring practice. I mean, the nature of Celsius's business is, I think, intentionally this sort of hybrid between the functions of a banking institution on the one hand, a brokerage institution on the other hand. And as a matter of law, banks and brokerage institutions don't file for Chapter 11. They can't file for Chapter 11. So in many respects, what Celsius understandably may be trying to do through a Chapter 11 filing is not something that has really been attempted before, in no small part, given that crypto as an asset class is such a recent newcomer, and obviously a major newcomer to the field of investing. But there's really no precedent for a business like this trying to navigate through a reorganization as opposed to a liquidation. So, for example, the traditional brokerage liquidation is precisely that. A trustee gets appointed, administers the assets, and the brokerage goes away. I mean, I heard the commentary about Lehman, or that's absolutely right. I mean, there is no Lehman brokerage. I mean, that bankruptcy liquidated Lehman's assets. That's clearly not the goal for Celsius as it's filed today, but Celsius is really trying to do what has not been accomplished before.
Well, Celsius is a major company. I mean, they reportedly have 1.7 million customers, $3.25 billion valuation in November, $11.8 billion in assets by May, and more than $8 billion lent out to clients. Is there any hopes for recovery, and how would that process play out in your view?
Again, at the risk of ducking the question, I do think it's too early to tell. I mean, Celsius assets are large in an absolute sense, but when you compare it to, again, a Lehman Brothers or Bear Stearns, I mean, these are fractions of the valuations at play in a Lehman Brothers bankruptcy, for example, or when you think about larger industrial companies like a General Motors or a Chrysler, for example. So it is certainly possible that Celsius continues to exist in some form, and certainly based on its public statements, the messaging is that Celsius intends to reorganize as opposed to simply liquidating its assets. But the traditional insolvency path for a brokerage firm is to liquidate. And it's a different set of laws that apply to brokerage firms as opposed to companies. But brokerages don't reorganize when they become insolvent. They simply liquidate the assets they have, distribute what they can to their customers, and that's it. So Celsius, I think, is a very challenging proposition ahead of it. At the same time, I do think, precisely because this is uncharted territory, they may be able to accomplish what would be atypical, to say the least, for a brokerage firm or a bank, for that matter. But they are trying what has not been done before in that sense, or if the goal really is to reorganize, as opposed to simply liquidating assets and distributing what they can to people.
So they are a Delaware company that works out of New Jersey, out of the beautiful state of New Jersey, I should say. And yet they filed in New York. Were they forum shopping? What's the significance of filing in New York in the Southern District as opposed to somewhere else?
You know, that's such a great question. And at the risk of maybe nerding it out a little too much for you and the viewers,
it's okay.
Bankruptcy law, but a company has a good amount of flexibility in terms of picking the location of its bankruptcy court or venue, to use the jargon. And you can have venue for bankruptcy in a number of different places. It's where your corporate headquarters can be. It can be, as you point out, the state where you are incorporated as a legal entity, which is Delaware in most cases. And here, Celsius is filed in New York. And it's not exactly clear what the nexus is between Celsius and New York. It appears they may have significant assets located in New York. But this is not an uncommon phenomenon and can be, and usually is, entirely appropriate. I mean, companies should have flexibility to pick the venue for their bankruptcy, as much as any time somebody is bringing a lawsuit, they kind of get to pick where they bring that lawsuit.
Yeah, it seems that you had Three Arrows and some of these other, and Voyager also in that district. I mean, what's the personality of the district, if you will, compared to other districts where people would file?
Sure. The Southern District of New York, I think, is widely regarded as probably one of, if not the most sophisticated jurisdictions for large-scale corporate insolvencies. To go back to some of the names we were talking about earlier, Lehman Brothers, General Motors, going back to date myself a little bit, Enron, WorldCom, I mean, really sort of massive and generational insolvencies were all filed by and in the Southern District of New York. So I think it's understandable that for a company like Celsius, which, as I mentioned, really is sort of potentially a generational opportunity, depending on your perspective, or a generational challenge facing the insolvency system, it makes total sense that you would bring it in a jurisdiction that really has a well-established reputation for being able to handle not just very complicated cases, but complicated cases where there's no clear precedent that you can point to in terms of how they've been handled before.
Is it more favorable, though, to the company filing than it is to, say, the creditors? Is that why they would do that?
I don't think so, because at the end of the day, there is a bankruptcy judge who's going to be making decisions on particular issues. I'd be remiss to think that somebody wasn't looking at the different case law applicable in the Southern District of New York as well as other jurisdictions and thinking that it could be a quote unquote more favorable place to file. But at the end of the day, most companies, and I think this is fair to say for Celsius as well, is really looking for the venue that can really handle what are going to be very, very tough questions facing the company, facing its creditors, and do it in an efficient way. And the Southern District of New York is really well equipped to do that. And that's not to say other judges or other venues couldn't do that as well. But the Southern District certainly has a well-established track record for being able to handle issues like this.
So at the risk of oversimplifying a very complicated matter, is there some world of possibility in which this kind of lets Celsius off the hook? Like this just basically, Celsius, okay, they're sort of relieved of some of their debt and they restructure and then they just go on to doing their thing later. I mean, I know that's oversimplifying it, but I mean, is there a world in which that is possible?
That's such a great question. And I don't think so, in the sense that, this bankruptcy is really going to be not just about how is value allocated, who gets what or what distributions happen, but frankly, there's going to be a lot of questions asked about sort of who did what when, who knew what when, and what are the implications of that. And there's going to be a lot of scrutiny applied to what Celsius's business model looked like, the discussions it was having, or how it was holding itself out to customers who are frankly funding the business. And again, many ways similar to how depositors act with a traditional bank, but at the same time without the protections afforded to the customers that you and I and the folks watching have if you put your money in a traditional bank. There's no same body of regulatory oversight. There are no protections akin to the FTC applicable in many respects or potentially applicable in many respects. So a lot of questions are going to be asked about really what was going on that kind of caused this to happen. And obviously there's a tremendous amount of volatility in the crypto market right now, but at the same time, that sort of means that, is this really or was this really an appropriate vehicle for retail investors to participate? Again, in the sense of funding a business that is much more akin to a traditional bank on the one hand, but lacking those same protections afforded to the customers of a bank on the other hand. So it may be possible that Celsius continues, as you said, but I think there going to be a lot of analysis applied to what was actually going on that landed us in bankruptcy court.
The crypto industry has a pretty short memory, though, so I don't know. but just going back to your point about retail investors, or what Christine was mentioning earlier. So if I understand correctly, you're saying that we don't actually know what's going to happen with these user withdrawals, right? Like if I put my money into Celsius, we don't know if we're going to get it back. But in the sort of outcome that they are able to get it back or recover some of it, what is the timeline here? Like what? Because I think this is the question for people who put money into the Celsius. When is in the best case scenario that they're able to recover some of these losses? I'm talking about the users and retail investors. When is the earliest that could happen? Because if I understand this correctly, this is a pretty long process, right? So best case scenario, how soon could users get some of their money back?
Best case scenario, realistically, is going to be at least months, multiple months. But as you said, these processes can drag on for a very long time. So going back to Lehman Brothers is still in the process of winding up its affairs and making distributions or payments to its creditors. And at this point, we're 14 years removed from the fact. And obviously, Celsius is a much, much smaller entity than Lehman by orders of magnitude. But that should give some indication as to when you have these very complicated questions and these very complicated balance sheets, which notwithstanding its size Celsius is, this process can take on a life of its own. And it can be many, many months, if not years, before creditors see recovery. And obviously, that's not the goal. Presumably, Celsius wants to move this process very quickly, but there are no guarantees. And before money is ultimately distributed, questions about things like, again, who knew what when, are going to need to be answered, and that can take time.
Indeed. And we are just seeing the folks who had money in Mt. Gox, a bankrupt exchange in 2014, are just about potentially getting repayments made. All right, Ryan, thank you so much for joining us. Appreciate your insights. That was Dahl Ropes & Gray LLP partner Ryan Preston Dahl. Coming up, we've got a crypto markets update with asset manager and investor Wave Financial. Live look at Bitcoin. The latest Bitcoin price XTX index is at $19,743. Bitcoin up about 3.2%. CoinDesk Ether price ETX index at 1082, also rising about 5.6%. The DFX CoinDesk's DeFi index is at 131, soaring over 11%. The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Celsius may be down, but inflation is hot. Joining us now to discuss the crypto markets is Nauman Sheikh. He is Managing Director and Head of Treasury Management and Derivatives Trading at Wave Financial. Welcome, Nauman.
Thank you. Good to be here.
Glad you're here. So, of course, we just had this inflation number come in, the PPI at 11.3. We had yesterday the CPI at 9.1. Clearly, inflation is not under control in the United States. The U.S. dollar, of course, being the most popular way to denominate Bitcoin and other cryptocurrencies. So are we going to see, in your view, some more aggressive or a more proactive Fed? And what will that mean ultimately to crypto? And is the crypto market reacting properly right now to all of this?
Yeah, hi. The numbers were certainly bad. I mean, they were worse than expected. CPI, I think a 41-year high, even PPI this morning was worse than expected. But if you look at the last 30 days, all the inflation assets, they've sold off like between 20 and 30%. So crude sold off, lumber, copper, raw commodities like wheat and corn, they're all sold off. So what that sort of tells you is that the market thinks that we're passing peak inflation. So the risk now is not necessarily inflation, but it's more of recession. That's the risk. And the Fed is hiking into a recession scenario. So the Fed fund futures have, I think, a 30% probability that we hike by about 100 basis points in July. We may not get there. It'll be probably 75 bips, but nevertheless, that's what the market is telling you. So the recession risk is high. And if you even look at the 10 to 2 year curve, the Treasury curve, it's at minus 22 bips right now. It's inverted and has been for the last week. Now, why hasn't crypto sold off more aggressively? I think the positioning in the market is pretty extreme. It's extreme bearishness at the moment in both in all risk assets, including crypto. So when the narrative shifts from just peak inflation and more of a hawkish Fed, which is already kind of priced into the market, you see sort of a short covering scenario. And this is exactly what you saw in crypto. This is exactly what you saw in TradFi markets yesterday when they bounced off the lows. I'm a seller into any rallies. I don't think it's sustainable. The only way the rally across asset classes, across all risk assets, is sustainable is if you see the Fed blink. And that's not going to happen for a while. You need to see a deceleration of headline inflation. You need to see or us entering a recessionary phase for that to happen.
So that, we just talked about the macro aspects of crypto, but of course there's some sort of industry aspects to it as well. And that, of course, is what just happened now with Celsius, and we had Voyager, et cetera, 3 Hours Capital, this sort of destruction, if you will, of institutional investors in crypto. Does that ultimately hurt long-term the crypto market, the enthusiasm for it, especially if this is the sort of financial crisis that crypto was supposed to solve rather than cause?
Sure. And I think there are a couple of important points to take away from that. First of all, everything that's happened in the industry is a credit event rather than a crypto specific event. Sure, it kind of the genesis of it was crypto. So the whole sort of the Terra debacle that kind of initiated a lot of this, but eventually it all kind of led down to a sort of credit event path. Now, the positive spin on the whole Celsius scenario is that it is a sort of drawn out process, but that also means that all the collateral that they hold will not be dumped in the market immediately, and that and we have to avoid that, right? The sort of forced selling into a down market that can really create a domino effect and just make things a lot worse. Secondly, also remember that if you look at on-chain events over the last couple of days or last few days, what does Celsius do? They paid back the DeFi loans first before kind of announcing a bankruptcy, right? So what does that show you? It shows you that DeFi is at the top of the capital stack, which is exactly what it was meant to do, right? The DeFi creditors got paid first, and then everything else, off chain is going through a bankruptcy process, which who knows over time who will get paid what.
Do you expect a lot more dominoes to fall? I mean, where do you think we are in sort of the crypto winter timeline? Is this kind of like, okay, we've already seen peak disaster, or is this just the beginning in your view?
I think it's just the beginning because you've heard of Celsius, 3AC, Voyager, etc. But what we haven't seen yet are all the secondary and tertiary exchanges out there who are definitely suffering as well. They lured in depositors with high yields. They gave access to 3AC as well. None of them have announced anything yet. They're kind of sitting tight and letting all this kind of draw out. But there's so many other skeletons in the closet right now. And given the fact that it's not on chain, and that's the con of the whole situation, is that process gets dragged out even more because there's a complete lack of transparency. So I would say another sort of 6 months before we see everything get flushed out.
All right, brace for impact. Nauman, thank you for your insights. Appreciate you coming on the show. That was Nauman Sheikh at Wave Financial.
Thank you.
Coming up, checking in with the state of NFTs with Toonstar and our regulation update with CoinDesk Managing Editor, Nick Day.
Hey, I'm Isaiah Jackson, host of Community Crypto and author of Bitcoin in Black America. You're watching CoinDesk TV?
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
Joining us now to discuss the latest on the regulatory front is CoinDesk's Global Policy and Regulation Managing Editor, Nick Day, who's also the editor of CoinDesk's State of Crypto newsletter. What's up, Nick?
Good morning.
So we've just done a pretty deep dive into Celsius. Anything we missed, anything that you're looking at particularly that you find interesting about this latest bankruptcy filing?
Honestly, it felt pretty inevitable, especially after the other companies started filing their own bankruptcy filings. But Celsius was the first to suspend withdrawals. So I don't know how much of this is really a surprise. The fact that Celsius is trying to they're going for a restructuring rather than just straight up saying, okay, yeah, we're out of funds, is interesting. I think it seems they're still trying to hope that they can bounce back from this. We've heard a lot about also just the fact that they've been repaying some of the DeFi platforms rather than customers. They've been trying to unlock some of their assets. So all of it kind of points towards Celsius, for whether it's accurate or not, acting at least as if they have a chance at reemerging from this, at least intact, if not as strong as before.
Yeah, but at the same time, you have states that are also looking into Celsius, correct? I mean, it's not, we have a wonderful federal system, so it's not just, federal bankruptcy here or just the bankruptcy. There are also state regulators who are kind of saying, hey, what's going on, correct?
Absolutely, and those investigations will continue. It's probably too early to say what exactly is going to happen with these investigations, but for sure, at some point, I imagine we're going to start seeing states come out and say, "Okay, well, we've investigated this and we have found X, Y, Z, and so we want to, proceed with." I'm not saying they're for sure going to, bring in enforcement action, but the odds seem in the favor of enforcement actions happening. But bankruptcy might just hold that off for a little bit. But again, investigations will be ongoing. It's not like those are going to stop just because Celsius went to court and said, "Hey, we want to restructure the entire thing."
Nick, finally, any meaningful updates from Babel Finance, Voyager, or Three Arrows Capital?
I think we're going to probably have to wait and see for at least Voyager. For sure, we're gonna have to wait and see for what the next hearings look like as the bankruptcy process continues. Voyager is probably the most interesting one, just because it does have both the U.S. and Canadian bankruptcy filings to go through. So, one thing I'm going to be looking out for is the similarities and differences between what they say in the U.S. Versus what they say in Canada. As for the rest, it's it's probably the same boat as Celsius at this point. It's going to come down to what can they recover, what can they claim to recover, what can they say, all right, well, we have these funds now, so we can, resume withdrawals or, start serving customers again. Whether that's likely, probably too soon to tell.
Mm-hmm. And really fascinating from our last guest who said, crypto has a lot of skeletons in the closet, so there could be more crypto companies that fall in the ensuing weeks.
Oh,
so
I would imagine.
Certainly monitor that. Thank you, Nick, for joining us. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
The NFT gaming sector has fallen 83% year to date, according to Arca, but innovation is still continuing. Mia Kunis linked to Web3 studio Toonstar is partnering with Hot Topic to market entertainment NFTs. Joining us now to discuss is John Adanasio. He's the founder and CEO of Toonstar. John, thanks so much for joining us. So, I love this concept that you have there. You have a show called Gimmicks. Mia Kunis, we all know and love, is executive producer. And so the idea is that viewers who own these NFTs can vote on each week's cliffhanger and see what and then have that contribute to what happens next in the week. And now you're partnering with Hot Topic. So tell me how that whole partnership is going to be configured in the equation.
Yeah, I think we're, so with the Hot Topic partnership, we're, I think part of our thesis is all about bringing crypto and Web3 to retail and basically take it mainstream. And so I think with the idea with Hot Topic, they've got 800 stores that we can now all of a sudden look at blending physical and digital, products. They also have 11 million people in their community that are all like heavy collectors of digital and physical goods. And I think that's also something when you think about like the like NFTs and where they're heading, this whole notion of sort of like bridging the digital and physical world is a really, interesting place to take where the experience can go.
Well, I guess the kind of elephant in the room is that we're in a down market right now. Crypto is falling apart. Our guests are saying, there are more crypto companies that are going to file for bankruptcy or, freeze user funds potentially in the coming weeks. So I wonder, how is the NFT space doing right now?
Yeah, I think we're always like thinking about the NFT space, I think from a long game. And we're, again, going back to like we really have this thesis around the idea that like entertainment's going to be the thing that will take Web3 mainstream. And also, again, like when you think about like entertainment, retail has played such a big role in building franchise IPs. And that's another reason we're excited about partnering with Hot Topic. And so I think if you're in the category for the long run, then, it really, this is like, I was, involved in sort of like Web 2 early days. And I think this analogy has been made, but it does feel like crypto, this is kind of like Web 2 circa like 2005. And they're going to be, ups and downs and sort of blips in the road. But I think builders are going to build, and people that are committed to the category long term are going to do just that. And we're very much committed. And I think we think about the category much more in terms of community building and experience. And that's something that is going to take a bit longer to build. But we also think about it in terms of like utility and bringing things that aren't just about like flipping assets and sort of speculation. It's about building real communities that are there to.
Okay, well, just sorry to jump in there, but how many users are being active right now?
So I mean, right now we've got 5,000 token holders, but to give you a sense of the utility, and this is where your show probably will take a bit of a turn. We have a thing called a dick punch, which we spell DIC. So it stands for decentralized inclusive community. But what it is, it's one of the first on-chain social layers that we've built for the project, and we're nearing almost 1 million dick punches on chain. And basically we're getting close to, we get about 70,000 dick punches per week. So, and those are all on-chain actions. And we're looking at it in terms of like, hey, you've got this group of like 5,000, like avid fans for the gimmicks in the community. And that's how much they're engaging with each other every week. And so to us, those are all sort of like signals of like, yeah, there's something with the world that is really resonating. And also I think it hopefully is a bit of optimism around like, hey, there is this way to do NFTs and build community that are about engaging with each other and sort of building, these kind of like interactions, whether it's interactive storytelling or like unique community experiences that really do have longevity. And I think we saw that in Web 2, and I think Web 3 just provides an opportunity to really take that to the next level.
Speaking of dick punches, I was thrown out of the Hot Topic in Paramus several years ago, and I haven't been back. Do I need to be a customer of Hot Topic to watch the video, interact, etc., or can I do it from home without having to go to Hot Topic again?
Yeah, so you can do it from home. So the way we've got the project set up is that the episodes are not token gated, so you can go to the Gimmicks website and watch the episodes. We're doing this is another thing that makes the project very unique, is that we're doing weekly episodes. And I don't know how familiar everyone is with animation, but in the animation world, like doing a weekly episode, usually it takes a long time. So we're doing these episodes there, and then they're also all community driven, meaning that at the end of each episode, there's a cliffhanger, and the community gets to like weigh in and vote. And so the episodes you can watch, but if you want to create a wiki, because the token holders create backstories for their characters. If you want to do that, you've got to be a token holder. If you want to vote on the episodes, you've got to be a token holder. If you want to send and receive dick punches, you need to be a token holder. And then we've also got a direct messaging system, so you can send token holders can send each other messages. But all that kind of like co-creation and utility that requires having the token. But if you just want to go and sort of understand how the world works and kind of get into the characters, you can watch that from home and not have to own an NFT.
So I noticed that the style is very much South Park, and of course there was that famous Hot Topic episode of South Park, which is maybe one of the greatest episodes they've ever made. Was that conscious? Was that a conscious decision based on that Burn Down the Hot Topic episode?
Yeah, so it was. I'd love to say it was. It wasn't necessarily a conscious decision. We. I think it's kind of a happy coincidence, just in that like the gimmicks and the way we describe the series, it's very much like it's very much South Park meets WWE, and like a bit of background about the series is it's again it's we're producing in partnership with Mila Kunis and Six Wall, which is her Web3 studio, and it's voiced by these guys are actual ex-WWE wrestlers. And so that sort of brings in the wrestling part of it, and it's actually penned by their names are the Dave Eilenfeld and David Wright, and they used to write for Family Guy and Star Trek Lower Decks. So it really is like this kind of like unique world that like brings wrestling and South Park together. So I think when we were building the series, because of the South Park sort of references, and also because it's community driven, and every week, we're sort of drafting on very like timely and topical pop culture stuff, we wanted to have an art style that was kind of a wink to South Park. So that's why it gives you that sort of look. And I think the other part of it is because the series is very pop culture driven. And then when you think about Hot Topic, to your point, Hot Topic is also very pop culture driven. I think it's like this kind of like happy marriage of the two, because the series and also the retailer and Hot Topic community is very much about pop culture stuff. But I think that's kind of how it ended up working out.
Well,
but
I'm
glad you. Oh, go. So sorry.
No, go ahead. But I find it interesting that, we're talking to these investment platforms that are going bankrupt, falling apart, freezing withdrawals. But, on the content side of crypto and NFTs, you guys are actually gaining traction, some organic growth there, and dick punches, if you will. Anyway, we got to wrap it there, John. But looking forward to speaking with you further at the Avalanche Hacker House. That's where we'll be this weekend, this Saturday in Brooklyn. So folks, if you want to know more, join us there. John builds on Solana, but is looking to expand into Avalanche. So that was Toonstar CEO John Atanasio. Let's check in with Crypto Twitter for our tweet of the day. And this is from Otaru, tweeting, Celsius, unbankrupt yourself. Some wishful thinking there. And, I don't know, Emily. I feel like that's what they're trying to do.
The unbank yourself was the...
Well, it sounds like they're actually trying to bankrupt. They're actually literally filing for bankruptcy, so they're doing the opposite of that. But anyway.
All right.
Yeah, this was what we were going to solve with crypto. Here we are again. Yeah. 2008.
Thank you, Emily. Thank you, Lawrence. I'm your host, Christine Lee. Meantime, check out The Hash at noon Eastern and all about Bitcoin. That's coming at you at 3 o'clock this afternoon. You're watching CoinDesk TV. Next up, stay tuned for the daily forecast to see what's happening in the Asia crypto markets.
Will Celsius customers ever get their money back? After the company filed for bankruptcy, the answer doesn't look good. I'm Joel Flynn. Welcome to the Daily Forecast, July the 14th, 2022. Celsius had just paid off hundreds of millions of dollars of loans. So why did they do that before filing for bankruptcy? Crypto prices, meanwhile, shrug off bigger US inflation and the prospect of bigger interest rate hikes. And could USDC be the next stable coin to topple? This is what's happening from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
So what exactly is Celsius up to? The crypto exchange has just filed for bankruptcy in the United States, but the move comes after it paid off hundreds of millions of US dollars worth of debts. Those repayments allowed it access to collateral in wrapped Bitcoin and just this week staked Ether. The $440 million worth of wrapped Bitcoin was moved to an account with FTX. Part of the roughly $435 million of staked ETH was also moved to another wallet. Just last month, Celsius bosses had vowed to fight for their customers, but what, if anything, can those customers expect now? Forecast Carolyn Wright has the details.
The crypto lender finally bit the bullet, filing for Chapter 11 bankruptcy with the same court handling Three Arrows case. Celsius said that provides the best opportunity to stabilise the business and protect stakeholders. Restructuring lawyers reportedly advised the firm to take the bankruptcy option back in June, but executives decided to fight on, saying that's what they believed clients wanted. The lender says it's spent the time since pausing transactions in mid-June exploring all the options and that they hope to emerge a stronger company. Celsius says it will continue to operate and that it has $167 million in cash on hand to support that. First priority for that cash? Paying its staff. It's not such good news for customers, however. Withdrawals are to remain on pause until further notice. The bankruptcy filing came despite the crypto lender paying off its last DeFi loan to Compound yesterday. According to data from Etherscan, $50 million worth of DAI was paid back, resulting in return collateral of almost $200 million worth of wrapped Bitcoin. Celsius has not said exactly what will happen with this collateral, but says it is obliged by the court to pay all post-petition obligations as they become due. I'm Carolyn Wright. Forecast.
Crypto prices have risen for the first time in days despite surging US inflation. Data from last month showed prices rising at their fastest level in 41 years. Analysts said the US Federal Reserve would now raise interest rates even more. Stocks fell on the news, but crypto was back in the green. Bitcoin had slumped 3.4% in the hour after that inflation data was released yesterday. It staged a comeback afterwards, though, back above the $20,000 mark as of Thursday morning in Asia. So what's happening? Forecast Lachlan Kalla takes a look.
US inflation soared 9.1% in June compared to a year ago, according to the latest Consumer Price Index report released Wednesday. This shows the US Federal Reserve's aggressive interest rate hikes have done little to curb rising prices so far. The figure also represents a 1.3% increase from the previous month, the most since 2005, as the ongoing war in Ukraine and supply chain backlogs in China contribute to raising prices. The Fed was expected to raise the interest rate by a further 75 basis points this month, but one analyst believes they may consider an even more aggressive approach due to rampant inflation.
Well, it was a shockingly high number. There's no two ways about it. I think there has been talk over the past 2 to 3 months that we'd see peak inflation, but instead we saw headline inflation and core inflation both accelerate. Now, what that does essentially is it pushes back expectations of a dovish Fed pivot until the very end months of 2022. It also raises the very real prospect that the Federal Reserve, when it meets in 2 weeks' time today, will deliver a supersized 100 basis point rate hike.
Sycamore warns that a 100 basis point rate hike is not the end of it.
So previously the market was sitting around 75 basis points. We thought we'd see that. The market was priced for that. But what has happened now is the interest rate market in the US is priced almost for 100 basis points. It's sitting around 92 basis points to be exact, but it's also priced for another 75 basis points in September and then another 40 basis points until the end of the year. What that means is that we've got about 240 basis points priced now between this point of time and the end of the year. But interestingly, reflecting the possibility that the Fed may go too hard, too fast, the interest rate market is now pricing in interest rate cuts from February 2023. And again, this reflects the possibility they might break something because they had just been too aggressive in their determination to tame inflation.
While stocks fell in response, the crypto market has bounced back. Major cryptocurrencies were in the green this morning in Asia, rebounding from a sharp fall after the announcement. But will this trend continue? Sycamore says a substantial rally for cryptocurrencies like Bitcoin is still months away.
What I think we need to see is, and whether you think that crypto leads equities, which some people do, or equities leads crypto, which has probably been more the trend over the past 6 to 12 months, you need to see risk sentiment improve. And I think given the fact that we're looking now for 100 basis points of interest rate hikes in 2 weeks' time, followed by another 75 basis points, it's not just going to be at this point of time. We're still looking probably 3 to 4 months down the track before equities start to rally, which means that for a more substantial rally in Bitcoin, it's still some months away.
One of the biggest winners overnight was Matic, that came after Polygon was selected as one of the 2022 participants for Disney's Accelerator program. The media giant said the Accelerator crop will focus on building immersive experience through technologies such as augmented reality, artificial intelligence, and non-fungible tokens. Meanwhile, Bitcoin's hash rate dropped by 27% in 24 hours on Wednesday, the lowest since February this year. This after multiple crypto miners in Texas, a mining hub for the US, stopped operations with demand for power surging amid a searing heatwave. I'm Lachlan Keller. Forecast.
Could USDC be the next stable coin to topple? Concerns over the state of Circle's USDC reserves are growing. Speculation was stoked over the weekend by an article alleging that Circle does not disclose what reserves are being held where. So, can users be sure that their cash is safe? Forecast Monica Ghosh reports.
Speaking in an exclusive interview with Forecast's editor-in-chief Angie Lau last week, Circle CFO Jeremy Fox-Green said reserves backing the USD coin were ring-fenced. He explained that as the company is regulated under state money transmission laws, it does not have any right on USDC reserves that are held in segregated accounts with financial institutions.
The institutions that hold the USDC reserve aren't lending it out in any way to grow USDC. They're just holding fiat currency within the banking system and holding US treasuries in custody on behalf of USDC holders. So there's no lending out of USDC to grow USDC. All USDC growth is driven by customer activity.
However, an article on Saturday by American author and journalist Matt Taibbi questioned how the stablecoin issuer projected earnings of $438 million from interest from its USDC reserves. According to Circle's latest weekly reserves breakdown, 42.5 billion of its 55.5 billion USDC reserves were treasuries dated 3 months or less, with the rest in cash. Even if coupled with next to no return on the cash, using the current yield on 3-month treasuries, the lowered average return on Circle's stated reserves would be above those projected earnings. But some have also questioned how reliable those published reserve figures are, with former banker Francis Coppola asking why there have been no audited financial statements since 2020. However, on Wednesday, a spokesperson for Circle told Forecast that the company's S-4 filing made on July 11th contains audited statements for both 2020 and 2021. The spokesperson added that according to standard practice for any Securities and Exchange Commission filing, the attached quarterly interim statements are not subject to an audit. Another of Taibbi's concern related to protection for investors in Wisconsin, Minnesota, and Wyoming, as Circle operates in those states without license and the protection afforded by state money transmission laws. According to Circle's website, they are licensed in Minnesota but not Montana, Wisconsin, or Wyoming, with Circle's spokesperson explaining that they do not have licenses in states where one isn't required. However, the company is registered as a money services business with the US Department of the Treasury, meaning they must abide by Know Your Business, anti-money laundering, and financial crimes compliance requirements. They went on to say the Circle is therefore not just relying on state law for bankruptcy protection, but also the federal bankruptcy code for what assets are considered assets of the estate and what is not. I'm Monica Ghosh, Forecast.
All right, that's it for today's Daily Forecast. We have got more details on Celsius, Circle, and everything else that's happening in the crypto sphere right now on our website. Head to forecast.news for more. There is a link to that in the description below. Like and subscribe to this video as well for more content like it, and follow us on Twitter as well at @forecast_news. I'm Joel Flynn. I'll see you next time.